Palantir stock, which trades on the National Association of Securities Dealers Automated Quotations Exchange under the ticker Palantir, has been one of the most dramatic beneficiaries of the artificial intelligence boom. Over the last 3 years, the stock has exploded higher by roughly 2,440%, a gain so extreme that it has naturally sparked intense debate among investors. Many market participants are now questioning whether the current valuation still reflects fundamental reality. This skepticism persists even as Palantir continues to post measurable, real-world growth across both commercial and government use cases, reinforcing the idea that the company is not simply riding hype alone. Against this backdrop of debate, Citigroup analyst Tyler Radke has meaningfully changed his stance on the stock. After previously remaining cautious and sitting on the sidelines, Radke has revisited his assumptions and now believes the risk-reward profile has shifted decisively in favor of investors willing to tolerate volatility. As a result, he upgraded Palantir shares from a neutral outlook to a buy with high-risk characteristics. Alongside this upgrade, Radke raised his price target to $235, up from his prior target of $210. If this revised outlook proves accurate, Palantir stock could still deliver roughly 37% upside from current trading levels, suggesting that the rally may not yet be finished. Radke explained that the core driver behind his upgrade is his conviction that 2026 is shaping up to be another year marked by substantial positive estimate revisions. According to his analysis, recent conversations with chief information officers and broader industry participants indicate that artificial intelligence budgets are accelerating across enterprises. More importantly, companies are moving beyond experimentation and increasingly identifying concrete, high-value use cases where artificial intelligence can be deployed at scale. This shift from curiosity to execution significantly strengthens Palantir's long-term growth narrative. Expanding on this theme, Radke sees powerful alignment between Palantir's capabilities and the dominant enterprise artificial intelligence trends expected to define 2026. In particular, he highlights the expansion of agentic artificial intelligence systems and broader enterprise adoption as areas where Palantir's strengths stand out. The company's deep expertise in data ontology, which allows organizations to structure, understand, and operationalize complex data, combined with its forward-deployed engineering approach, positions it uniquely to capture this next phase of demand. These advantages are not theoretical, but increasingly visible in reported performance metrics. One of the most compelling data points supporting this thesis is Palantir's recent performance in adjusted remaining deal value, which serves as a key indicator of future expansion opportunities with existing and prospective clients. During Q3, the company reported more than 250% year-over-year growth in this metric, signaling a rapidly expanding pipeline of potential revenue. At the same time, early signs suggest that artificial intelligence is actively accelerating migration and deployment efficiency. Taken together, these dynamics lead Radke to believe there is a credible path toward an upside scenario of roughly 70 to 80% total revenue growth in 2026. The government segment represents another major pillar of Radke's bullish outlook. For 2026, he forecasts year-over-year growth of 51% in this segment, a figure that stands roughly 800 basis points above broader market expectations. In a more optimistic scenario, government revenue growth could exceed 70%, underscoring the magnitude of potential upside. This forecast is shaped by expectations of a ramping defense supercycle, as global geopolitical tensions drive increased spending on advanced software and data-driven decision-making tools. Further reinforcing this outlook is the ongoing modernization push among United States allies, many of whom are upgrading legacy defense and intelligence systems to better integrate artificial intelligence-driven capabilities. Radke emphasized that he will be closely monitoring announcements related to Golden Dome and other major defense initiatives throughout the year, as these developments could serve as meaningful catalysts for Palantir's government business. While he cautions that the largest numerical impacts are likely to be felt in 2027, the groundwork being laid now strengthens visibility into sustained long-term growth. Beyond top-line growth drivers, Radke also believes Palantir's pricing strategy could become an increasingly important tailwind. The company employs a value-based pricing model that ties customer costs more directly to realized realized benefits rather than simple seat counts or usage metrics. According to Radke, customers are increasingly reporting cost savings that range from tens of millions to even hundreds of millions of dollars through the use of the Palantir Foundry platform. These savings create powerful incentives for customers to deepen and expand their relationships with the company over time. This point was further reinforced during the Citigroup Information Technology Day, where Radke highlighted insights from a Citigroup information technology leader responsible for overseeing the Palantir contract. That executive emphasized how Palantir's ability to rapidly deliver proof-of-concept solutions and transition them into full implementation can dramatically reduce both deployment timelines and overall costs. In an environment where enterprises are under constant pressure to demonstrate clear returns on technology investments, this speed and efficiency become critical competitive advantages. Another differentiating factor that continues to gain recognition across the industry is Palantir's early leadership in the forward deployed engineer model. Under this approach, Palantir engineers work directly on-site with customers, collaborating closely to customize, deploy, and optimize solutions in real time. This hands-on engagement model has proven particularly effective in complex environments where off-the-shelf software alone cannot address unique operational challenges. As artificial intelligence adoption accelerates, more software companies are beginning to replicate this strategy, validating Palantir's early conviction. Radke notes that discussions with partners at the Citigroup Generative Artificial Intelligence Summit and the Cloud Forum at reInvent consistently highlighted the efficiency and effectiveness of this model. What was once viewed as unconventional is now increasingly embraced by major enterprise software players. Companies such as ServiceNow and Salesforce are adopting similar approaches, further underscoring how influential Palantir's strategy has become across the broader software landscape. All of these factors combined help explain why Citigroup has turned decisively bullish on Palantir. However, despite this growing optimism from some corners of Wall Street, consensus sentiment remains mixed. Radke now joins 4 other analysts with bullish ratings on the stock, but a larger portion of the analyst community continues to urge caution. Alongside the buy ratings, there are 10 hold ratings and 2 sell ratings, resulting in an overall hold consensus rating for Palantir. From a valuation standpoint, the average price target across Wall Street currently stands at $192.88. Based on this figure, the market is collectively forecasting approximately 13% returns over the next 12 months. This modest expected return highlights the ongoing divide between analysts who believe Palantir's artificial intelligence-driven growth story is still in its early stages and those who worry that much of the upside has already been priced in. Ultimately, Palantir sits at the intersection of extraordinary technological promise and elevated investor expectations. Whether the company can continue to justify its valuation will depend on its ability to translate artificial intelligence momentum into sustained revenue growth across both enterprise and government markets. With accelerating adoption trends, expanding deal pipelines, and growing validation of its business model, Palantir has given bulls plenty of reasons to stay optimistic, even as skeptics remain watchful on the sidelines. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.